Roelof, Miguel, where are you both coming in from? London?
I'm in London, and I think, Miguel, you're in Spain with your family.
Yeah, exactly. I actually traveled to Spain yesterday night. So yeah, I'm in Madrid today.
Nice. Well, maybe, obviously, this is not for me, but for everyone listening, can Roelof, you just give kind of your background, obviously, and your experience at Fifth Wall, and Miguel the same.
Yeah, sure. So my background is kind of heavy in software. I was part of the founding office for Evercore, and then before that, Goldman Sachs in Menlo Park. I was a software investment banker, then joined a large Silicon Valley venture capital firm called Nigorra Venture Partners, about 8 billion under management. I was in later stage information and services and software investing, kind of growth stage investing, and then got connected to Brad and Brendan right at the beginning. I think we were still raising Fund One, and just really bought into the vision, really liked them, thought they were great leaders, great people to work with. And so then moved down to LA with my, my then girlfriend, now wife. And, we started Fifth Wall together, kind of part of that first 5 or 6 people. Did Fund One, started raising Fund Two, and then we saw an opportunity for Europe. And I guess to go into a bit of the genesis of that, for us, what happened in Fund Two is that we raised this really large fund, and we did get a lot of interest from European LPs and included a few in the fund. But the real idea was that they wanted to learn from US technology and potentially bring it to Europe and really learn about what was happening in Proptech in the US. And when Brennan and I traveled there, we started noticing that there was this kind of 2 to 3 year delay from what was happening in the US and then what was happening in Europe. In fact, we were literally seeing it in front of our eyes that the things we saw when we started Fifth Wall, kind of European versions of that were popping up. In addition, we saw a huge amount of demand for a firm like Fifth Wall. People literally told us, look, we actually are more interested in European Proptech. We wish, you guys were here. We wish you had a fund.
There was no Fifth Wall in Europe, right?
There is no Fifth Wall in Europe.
Now exactly. There is.
Now there is. So, just kind of the DNA at Fifth Wall is we're always trying to help our partners. We're always trying to think of creative ways to add value to them, and really to help the ecosystem. And so Miguel, who we had hired in London, myself and Brendan, really came up with the idea of doing what we were doing in the US, and that's how it all started.
Yeah, and obviously Miguel, just to kind of set some of the background of your joining. I think when we first brought in European strategic LPs to our fund too, we had the experience exactly that Roelof described, which was almost a bit of surprise that like, wow, there's this kind of gestating opportunity in Europe that does feel like it's like 3 years behind the US. But so much of our model is predicated on these kind of really deep, really intimate, really high trust, almost consultative relationships with our strategic LPs. And so maybe you can tell the story of you joining Fifth Wall kind of in that vein, and then the arc to our European fund.
Yeah, for sure. So, my background, as a quick introduction, I spent 9 years with McKinsey across different offices. Originally started in Madrid, where I'm from, did a few projects around the world, and then spent later time in New York and then London since 2015. And with McKinsey, I was mostly running, in some cases, like multi-billion digital transformation of huge organizations, a thing that is relatively similar to what we do at Fifth Wall, right? Which at the end of the day is work with large corporates to try to identify ways of disrupting and innovating in their existing business models, right? So I guess when I met Brad and actually Roelof at a McKinsey event back in 2018, at the time, you guys were raising Fund Two, right? And there was an opportunity to obviously start working with a few European groups, as Roelof mentioned. I thought it was quite interesting. So I joined at the beginning of 2019 to set up our at the time, small London office. We obviously worked to set up all the infrastructure here in Europe and start working with our LPs, right? And what we found out at the beginning, which I think was what we were expecting, but we were able to prove it, is that a lot of the challenges that corporates have in Europe are not that different to what they are like experiencing in the United States or Asia. The priorities are pretty much the same. The technologies out there in many cases are the same. The only challenge is that obviously they were having difficulties bringing some of these US technologies and working with them from Europe, right? There were in some cases certain areas or certain verticals in the real estate tech industry where the US was obviously ahead. So being able to bring these ideas, to bring these companies to Europe with our experience in the US was great. While at the same time, obviously, there's a lot of very interesting companies that are arising in the different markets in Europe. So being able to work with our LPs to identify these companies early on in the local markets, I think it's pretty much what we do at Fitwel and was a bit the genesis for the fund.
And I almost want to tell this story looking backwards. So why don't we talk about like where we are today, and then we can almost rewind the clock to like what our original premise was in launching Europe in the first place, you know, some of those insights and what we've actually learned in the process about what's unique about Europe and some of those assumptions. But where are we today with the European fund?
Yeah, so maybe I'll start and Miguel can add anything I'm missing. So we actually did our second close last week. That takes us to hit our target of roughly about 90 million euro. It's about 110 USD. We have about a dozen LPs that include some of the biggest owners and operators in Europe. And these are all new LPs to Europe, to the European fund and to Fifthwall. They include groups like BNP Paribas Real Estate. It's the largest service provider in real estate in Europe, which is really exciting, as well as groups like PGIM, the third largest real estate asset manager in the world, working with their European firms, and then some of the biggest pensions in the world, such as Ivanhoe Cambridge. So we've really been able to replicate what we did in the US by getting the largest owners and operators in different territories in Europe, and working with them on their strategic priorities, but really using that distribution model that we really perfected in the US in Europe in terms of getting ahead of them, backing the greatest and most innovative entrepreneurs, and then connecting them to these large institutions, in a sense, creating this distribution funnel for them. So that's where we are right now. We're very excited, still based in London, and I think we still will be in the future, have a strong team here. And Miguel, I don't know if I'm missing anything else there.
Well, maybe just to ask you, maybe this is a good segue. I'd love to get your perspective on this, Miguel. So, obviously there's no fifth wall of Europe, or at least there wasn't, right, until we now launched this. And I guess, some of the feedback I experienced at the beginning of launching our first fund in North America was that real estate corporates were starting to have this light bulb moment. They were starting to recognize that, adopting and integrating and being associated with new technologies is increasingly existential to their business. But despite that recognition, there was kind of like three approaches that they would take. One is, I'm a real estate owner, I shouldn't be doing tech. I think, most of those CEOs are probably now gone, or most of those real estate companies are gone. That's a model that doesn't work, but it did persist at the very least back in 2016. The other model was, I'm going to do this in-house. It's the DIY model. It's because I'm a good real estate investor, I'm going to be a good venture investor. We all know how that story ends. You're probably not going to be a good venture investor. You're probably going to lose a lot of money, and the corporate venture program will get shut down. But we did sense this kind of need for a consortium, right? That in aggregating the industry and aggregating the largest owners, operators, developers of real estate, we could create these network effects that are kind of intellectual economies of scale and sharing information between them, but also distribution to our portfolio companies. Did you see that, I guess, in explaining the number of corporates that have already come into our fund, did you see that same set of circumstances in terms of how European real estate corporates were looking at real estate technology in 2019?
Yeah, I think it's exactly the same, Brendan. I think I see this as a journey, right? I think that corporate innovation in real estate in Europe has evolved in a similar way that it did in the US. And I think where we are now is corporates are basically starting to realize that, but at the same time, they understand that this is very, very difficult, right? And I think there's two main reasons why doing this either by yourself or not doing anything doesn't work, right? The first one is that we are now very excited to have 16 LPs in the network in Europe. That creates what we call intellectual economies of scale, right? Which is, at the end of the day, being a single LP, it's really hard to understand what are the priorities, what are other groups thinking about, how can you really create ROI and impact for the business and learn from the mistakes and that others are making, right? So at Fitwel, we're able to do that only because we have 60 plus LPs in the entire platform, of which 16 are in Europe, right? So doing this by yourself is not going to work. The second thing is that we track over 70 investment themes here in Europe, right? There's no way as a corporate you're going to be able to do this by yourself unless you set up a huge team to do it, right? So I think the combination of those two things is what creates a lot of value. And I think that corporates are realizing that this is actually an ecosystem, right? That you can drive a few initiatives internally, but for some of the large ROI projects, you actually need startups or companies out there to help you, right? Because they're going to have the focus and time and capital to do it. And then you also need someone that is able to digest all the information for you, and it's able to bring you learnings and lessons learned from implementations in other places, right? So I think I see this as an evolution. I think a lot of the corporates have now realized that. And I think they're starting to actually work in a way that is actually creating returns for the businesses, the same way that we saw probably with a few of the corporates in our Fund 1, right?
And Roelof, I know at the beginning, right, when we were kind of first ideating this, there was kind of this duality in our approach where we had this recognition, I know we talked a lot about it, that the business of, say, owning an office building and the technology pain points and opportunities that come therefrom are kind of the same, whether you own an office building in New York or Tokyo or London, right? And so there's a simplicity to that. But there was also an element of in bringing in the European LPs to our fund too, was we can expose these European real estate owner, operator, developers to technologies coming out of North America. But we had this recognition that at the same time, there's this fledgling but rapidly growing European real estate technology ecosystem, and Europe is not the same as the US. It's more balkanized geographically with respect to language, with respect to culture. And so how have you kind of tethered the original insights that we had to the realities of working in Europe? And I'm especially interested in your perspective, Roelof, having both done it in the US, but now in Europe as well.
Yeah, I mean, I think to answer that at the beginning is that the beauty of the Fifth Wall platform is versus a kind of generalist VC. If you look at a big generalist VC, a really great investor, you know, they tend to be very nationally oriented. And yes, they may have an Israeli office, they may have a Europe office, but there's not necessarily network effects between those, because if they're looking at a fintech company in the US and a fintech company in the UK, the regulation is just so different, it's night and day. But the beauty of Fifth Wall is that the truth is a lot of these problems real estate owners and operators deal with are fairly universal. They may have particular local nuances to them, but running a building in China, running a building in the US, running a building in Europe, it's got similar problems to it. So the beauty of that is that the learning we have across team and through LPs is really radical, and we can really learn and build on each other's teams. In turns, the LPs can learn from each other and we can learn from the LPs. So what's interesting for Fifth Wall is that there is actually a radical improvement, in my opinion, and radical network effects by going abroad, having more diverse products and offerings, and at the same time having other offices and having other learnings. I think that's number one. I do think that there are some learnings here that we learned in Europe that, you know, versus the US. One is, you're absolutely right that it is a bit balkanized. The markets that some of these companies are covering initially can be quite small. If you are a pricing analytics company for residential in Switzerland, that is a small market. It's very hard to build a unicorn or a very large company out of that. So what you see here, which is really interesting versus the US, is that companies and entrepreneurs that are starting to enter the space, and the quality has improved drastically, even over the 2 or 3 years that we've been here, they are automatically thinking about new markets and different national markets to go to. That Swiss entrepreneur or that Norwegian entrepreneur knows they cannot build a big company by just staying in their geography. And so automatically they're thinking from day one, their roadmap includes going to different geographies. And a lot of times it does include, step 2 or step 3 going to the US, which is really why they're looking for us. They're really looking at us as a bridge or nexus to the US market, which we know US real estate, biggest asset class in the world, and they want to hit it. So I think that's the one thing that we certainly appreciated and kind of went through. The second thing I would say is that I didn't expect when I first got here the wave of US interest we're starting to get from our generalist partners that have kind of smaller offices here in Europe that heard that we were here. As you probably know, we work with, and when I was in the US, we worked with a lot of really great generalist firms that look to us for insight and look to us to support, and then also look to us because of our distribution systems. As soon as they started hearing that Miguel and I were putting the fund together and raising and closing, the phone and the emails almost ringing off the hook, right? In the sense of we're really getting sought after because you are seeing a lot of people looking at Europe and saying, this is the next market where lots of venture capital is going to go into. And a lot of times it's not overheated. People feel like there's a real opportunity here for venture capital to take off. So I didn't really expect the wave that we actually are seeing.
And I know on that point, this is something obviously that it feels like it is a benefit of being so international, but North American real estate tech really pioneered real estate tech in many respects. So the emergent category winners in North American real estate tech. And I guess, how do you think about the pattern recognition of seeing what works? What were the paradigms? What were the business models that were extremely effective in the US that led to outsized returns for investors, outsized strategic value for strategic LPs? And how can those be applied in this different ecosystem of Europe? How do we think about applying that?
Yeah, so I would say, just learning from the US, I think we fit companies in 2 categories, at least here in Europe. One is local category, where the local nuances of rules or regulations make it so that it's unlikely that the US leader is going to come to Europe. A great example is Opendoor. US residential sales, you're talking about, probably one of the largest markets in the world. Opendoor has plenty to do in the US, and buying and selling a home in the UK, France, Germany, radically different than buying and selling a home here in the US, excuse me. And so unlikely that Opendoor is going to come here because they'd have to rebuild all of that infrastructure. However, iBuying is a concept that is migrated here and starting to really take off in Europe. And what we can do is, because we have the pattern recognition of, because if you remember, there were other copycats very quickly. And so when we looked at Opendoor, if you remember, we looked at all the other companies as well, and ended up with a matrix or learnings on why we identified that as the clear winner, and it ended up being the clear winner. And so what we're able to do is kind of replicate that playbook. And if you think about it in Europe, it's even more the case, right? Because they've seen Opendoor work, and now you have a number of copycats. And so the key is to take that playbook and really apply it. And it's even more important in Europe because of the fact that there may be 20 or 30 entrepreneurs out there, and you really need to figure out who are the real winners and who are those winners going to be and what are the traits that they need, versus the sea of people just copying and they're not going to be successful. So I think that's the one in the localized. Then there's a second category, and this is particular in VTS. VTS does lease management software. A lot of the companies it works with are global real estate companies. They don't want to have one leasing management system for the US, one for China, one for Europe. They want one system globally. And so for a company like VTS, it fits in that category of it's likely to be the global standard, and therefore it's likely, and we have been helping them in Europe, and it's likely to be in Europe, it's likely to be in China, it's likely to be all over the world and dominate. And so the beauty of that for us is, one, we can help those companies in Europe. But then I think secondly, we know that that's the global standard, and that's likely to defeat any kind of local company that's there. And so in those categories, we can stay away from companies that likely aren't going to be successful because of the global dominance of the US company.
Miguel, do you find that
I will add to that.
I was just curious that just on Roelof's point, do you find that European LPs have kind of metabolized that insight?
Yeah, I think so. And I think the way probably they think about it, or at least I think about it, right, is that we have a very unfair advantage at Fitwel versus other funds for the market in general, right? One, as Roelof was saying, is we know what worked in the US, right? So we were at the front and center of some of these initial models that are now developing in other parts of the world, right? So to some extent, we have all the experience and the knowledge from that, and we're able to bring these lessons into Europe and obviously help LPs that might be looking at some of these things in Europe for the first time, but it's not the first time for us at Fitwel, right? I think the second advantage is that we actually know and we are supporting our corporate LPs implementing some of these technologies, right? So we know what things are working, what things are not working, so that obviously it's additional information for our own underwriting as a fund, right? When we look at some of these companies, but it's also very, very relevant information for our corporates too, right? Because we can clearly tell corporates, hey, this is very interesting for the fund from an investment perspective, right? But there are some things that might not be as interesting for the fund, right? From a pure financial point of view, but they still create a lot of strategic value, right? And we are able to tell LPs to actually get them think into three buckets, let's say, right? Which is things where they should invest and they should take a stake in a company because they can actually make a lot of money. Things where they should strategically be thinking about partnerships because that particular technology can create value for them, even if it's not a great investment from a pure financial point of view, but it creates a lot of strategic value. And then a third category, which is things you need to avoid. And like avoiding wasting time on the things you shouldn't be spending too much time, I think it's also a great value that LPs take out of a Fitwel relationship, hopefully, right?
And there's another point also, which is I'm curious if you think this kind of plays out in Europe in the same way it did in the US, which is Fitwel itself, by virtue of having effectively aggregated the demand side of real estate. So the largest customers for the very technologies we were investing in, it's almost like our investment became a proxy vote on who was likely to succeed or fail. And Roelof, you gave the example, obviously, of Opendoor. And at the outset, remember, a lot of the home builders were looking at this company, Opperman, right, which was just kind of a weaker version in almost every regard of Opendoor, and clearly would have been a worse outcome to bet on. And in some ways, the fact that Fitwel, invested in Opendoor, structured this really transformative partnership with Lennar, and then ultimately brought in D.R. Horton, Pulte, Toll Brothers, and Lennar into our second fund, which effectively represents, I think, 20% of all new homes built in the U.S. It was almost like we kind of functioned like a kingmaker by virtue of, who we chose to work with. Do you think that will play out in the same way in Europe? And the reason I ask is that there's not really a Fitwel today in Europe that can credibly say we have aggregated the demand side of the real estate industry for new technologies. I think we're doing an awesome job of doing that. But the advantage that kind of gives you, right, is other real estate corporates want to join that consortium, right? They want to be at that party, or they ought to be at that party if they're being responsible investors. Two, VCs, like the kind of generalist VCs that oftentimes know the emergent winners, they want that proxy vote from Fitwel in their companies. But also portfolio companies or prospective portfolio companies seek you out. Like we're being solicited for our investment. Do you think that same kingmaker dynamic that Fitwel now has in the US, kind of from the Opendoor and many of those transactions, does that play out in Europe as well?
Yeah, and in fact, I think it may be that on steroids. And I think part of it is that when you look at some of these countries or you look at some of the geographies in Europe, there's almost more brand concentration in a few names, and luckily they are fifth wall LPs. And so what it means is that you don't have to have that many partnerships, or we don't have to set up that many partnerships for it to be the clear winner, clear category winner, and therefore de facto solution.
Meaning, Roelof, what you're saying is that because it's a more discrete, right, set of kingmakers that we have largely aggregated, there's actually just less competition. And so our distribution lane is a larger percentage of the market in Europe than it is in the US.
That's right. That's exactly right. And I think it's also just a function of these individual markets are smaller markets than the US, right? And so because of that, you have that concentration, which is really important. I think the second thing also, and I think you sense this, is that although Europe is developing incredible technology domestically, I do think that still all over the world, even in China, even in Europe, people do look for the US in terms of venture capital expertise and in terms of where the trends are going. And so I think that the fact that we are a US brand to start with and then have emerged and become a global brand, I do think helps in terms of people looking at us at being kind of that stamp of approval. And so I think that that's a really important thing, is that we're already getting startups coming to us, and startups and their large generalist firms that are leading the rounds coming to us and saying, this company needs help in real estate. We need Fifth Wall to be part of this round. And so that's what we're doing right now, and is part of it. And we're very excited to help it. I also think that Proptechs in Europe, particularly new talented entrepreneurs that are entering the space, are looking at Fifth Wall and saying,
one thing that I think is so interesting on that, and I want to ask you something, Miguel, in particular, about how European LPs think about that. But is a part of that, and I'm curious to get your perspective on this, Miguel, is a part of that it's not just the European LP base that Fifth Wall has. We now have, I think, 65 real estate owner-operator developers from, I think, 15 countries now, right, across our global platforms and all of our funds. And is part of that interest that we're seeing in Europe from these, I like the way you said it, Roelof, Proptechs. You're sounding very European. So I would actually say Proptech companies. But from these Proptechs, are they seeking that? Are they seeking that kind of transatlantic expansion? Do you see that, Miguel?
I think so, and I think there's actually one additional component to it, right? Which is, when you think about Europe, it is not really as opposed to the US, there is an additional complexity to be considered, which is there are not that many pan-European companies right now, right? So when you think about that kingmaker model that we were describing, there's one additional thing to add, which is the only way some of these companies are going to be able to grow is not just by getting to the largest real estate groups in a certain market, but they need to get to many different countries and do it, right? So this is, in a way, an accelerated way for them to do it. And being able to figure out different playbooks for different markets, I think it's also very, very relevant, right? So when some of our corporate LPs and companies actually came to us in the first place and we started working with them, a lot of what we were doing is support some companies go to other markets and do that with our LPs, right? So kind of for some of our portfolio companies, actually, they came to Europe to a certain market because they were able to do a partnership with one of our LPs. For the LP, they were able to adopt a certain technology because we were able to bring them that company to them, right? In a way, it is a virtuous cycle that basically is created. And if you're able to do that across Europe, it is even more powerful, right? Because there's a lot of people trying to do this in different places, but they are in a single market, in a single country, in a single asset class, right? So to have the full perspective around everything that is going on and being able to help these dynamics, I think is very powerful for us.
And I'm curious, one of the things that every time we talk to a real estate owner about investing in a fifth wall fund, there is this kind of, there's friction, right? Because it's new for them, it's different. They're not accustomed to investing in passive funds. And one of the points of friction we always encountered in the US, and that I know we encounter in Europe, is we're a real estate company. We shouldn't be investing in other people's funds. We shouldn't be investing in tech. And I think at the beginning we kind of had to lean into the, well, that's clearly the wrong side of history, right? Like Darwinism works pretty well in the real estate industry, just as well as it works, in the rest of biology. And I think now we have some proof points, right, to that in the US. Obviously, what has happened when you talk to a European LP and they have that reflexive response, why should I invest in real estate technology? How do you respond to it now, given that it's 3 years behind in Europe, but we have all these proof points in the US?
I'll start. I mean, it's funny. It reminds me a lot of if you hear the interview from Jeff Bezos and he had to explain his first investors what the internet was. It reminds me a lot of that. I think initially, well, one is we actually aren't encountering that much these days. I think whether it's the pandemic that just accelerated everything, or it's just the climate we're in, I think people are starting to pay attention, and more importantly, the boards are saying to their CEOs, what are you doing on tech, right? And that's a big thing for them, is that they're getting pressure from the board. But those that do have that kind of reflexive response, what we tell them is, look, the thing about technology is it's not just about you being more efficient, or you having new product lines, or you being able to partake in this really the next industrial revolution, which is the digital revolution. It's that technology is changing the way we use property. It's changing the way we live. It's changing the way we use real estate.
It's existential.
I like that you provide. What's that?
It's existential, right? It's
no existential.
Longer. It's like technology investing is no longer a cocktail party investment. It's no longer about like doing what you already do the same, but a little bit better, faster, cheaper. It is existential to what you need to do as a real estate owner. What you're saying, Roelof, is that realization has dawned in Europe.
Yeah. Yes. And I think, all you have to show them is Amazon, right? If you had known what Amazon was going to do to retail, negatively, but positively to logistics, you would be a very wealthy person. And so my hope for Fifth Wall is that if we had been around when Amazon was dawning, we could have gone to our retailers and said, hey, you may want to kind of shift into more core assets or more real prime assets. And we could have gone to our logistics providers or other people and said, you need to go into logistics, right? And that's kind of the foresight that we're providing. The other example I really like that I've heard you talk about is the fact that, and I get I think you and I were in early in tech together, or the same similar time period, is all those, the hottest new asset class now is data centers. And what's so funny is all those data center companies were considered tech companies not that long ago. And now they're just data center companies. So, and they're considered real estate companies. So I think the line between technology and real estate really does blur. And to think about the future of real estate, you have to think about the future of technology. It is existential, as you said.
Miguel, curious to get your view.
No, I totally agree with Roelof. I think that by now we probably no longer get that question anymore, which is, I guess, good news. Or we don't get it from the most forward-thinking groups, right? Which at the end of the day, it's the groups we work with. But I would say probably the question we get those days is, why should I do it with Fifth Wall, or how do I start? Like, it's this type of questions, right? So I think the way we answer those questions is, look, there's so many ways you can do this. There's so many different paths you could follow. But at the end of the day, what we could help you with is we can be first like your thought partner, right? Kind of like idea generator. So we can come to you and show you everything that is happening, right? And help you prioritize within your pipeline of ideas. And we can actually help you execute on a few of this, right? So we are deal experts, we do investment, we're out there in the market, we know all the companies, right? So that's obviously a great advantage.
It's like then you say is you can hit the ground running, right? As opposed to having this standing start and doing it on your own.
But that's only 50% of the game, right? The other 50% is actually implementing these technologies or knowing how to start these partnerships, right? So for that second 50%, we are kind of like a transformation facilitator, if you wish, right? Think about it as an extension of your team, right? And that's what we tell these groups. We are an extension of your team. We have eyes in the market, but also know your company, right? And we know what you need, how do you work. And I spent I don't know how many hours, but a lot of hours talking with the executives of our corporate LPs on a weekly basis, right? And with that, we basically understand what they care about. And a lot of the times we know that a certain technology may or may not work for them depending on the way they implement it, right? So it's not only choosing the right technology, but it's knowing how are they going to implement it and how are they going to execute on a few of their priorities, right? So I guess right now we're probably getting actually more cold emails from LPs than ever in companies. I mean, Roelof, we get a lot of emails every week from our corporate LPs saying, hey, we've looked at this company, this other company, can you talk to them, right? So I will say that we're probably at a golden age of PropTech in Europe. Like it is amazing. Like we're getting so many deals, so many opportunities. LPs are so excited, so engaged that I think it's the best time to start a fund here and start deploying capital, right?
And I think there's just two other points I would bring, which is really that I think the mentality is changing, and the example of the mentality is changing in terms of technology spend, what it represents. I think that the LPs we're lucky to work with, and then the ones that are out there that are asking us, hey, why should I work with Fifth Wall, or should I work with Fifth Wall? Is the real estate mentality is very much a CapEx mentality, right? So I buy a building, I put CapEx into it, and then that's it. It's done. I just maintain it, and that's it. And that's not how technology works. Technology is you spend a certain amount of money, you build a moat, and then every year you need to redig that moat by spending more money. And that's the way the Googles of the world, the Amazons of the world, the Netflixes of the world think about it. Is they think about that tech spend as R&D. It's a percentage of my revenue that I need to spend every year, and this is it. And I think more and more our partners are starting to realize that they need to think that way. And part of that R&D certainly is investment. No doubt it is, to be close to those investments and be part of those partnerships. So I think that is a huge part of the mentality shift that is going to have to take place and is taking place in real estate. And that's something that we generally point to.
Yeah, I feel like the whole conversation should give everyone a lot of optimism about what's imminent in European real estate technology, and kind of this growing awareness from European real estate owner, operator, developers that tech is existential, that they have to basically work with outside parties to truly engage with it. And it sounds like a lot of precedents from the US. And I guess what always my hope has been, and it sounds like it is becoming a reality, is that the same consortium, right? The same kind of network effects and the same kingmaker dynamics that in many ways we pioneered and built in the US, we can replicate in Europe. And by virtue of replicating it in Europe, both the US and Europe are definitionally stronger because it is under the same franchise with the same kind of shared insights, learnings, companies, the awareness of which companies can expand from the US to Europe and not vice versa, and kind of all of those nuances. And so I think it's just awesome to see how far we've come in such a short time in Europe, and how much European real estate owner, operator, developers are embracing, kind of this new technology-driven future for the whole real estate industry. So Roelof and Miguel, I'm excited to see what's next.
Yeah, no, we're really excited, and love the support of all our LPs here, and really are seeing that synergies, and really are seeing the advantage of being a global firm, and just the network effects that it provides.
Awesome. All right, well, thank you guys.
Thanks, Brandon.